serving our seniors ministry here at Our Lady of Joy. We put on these seminars usually once a month between the spring and the fall. And this is going into our 6th year. So we'd love to have feedback from you on new topics, because I think we've covered a lot of things in this time frame. And recently, this past year, April Garrett had come and had put on a seminar that was very well received, and so we've invited her back again, and she's brought another panel of experts dealing with death and taxes, which is something we all, I guess, have to deal with sooner or later. So I won't hesitate. I will let April get started, and it's going to be very informal, so help yourself to snacks, restrooms, and back here in the corners. So.
Thanks, Gabby.
All right, thank you.
Hi, everyone. Can you hear me okay?
Yeah.
Can you hear me now? So my name is April Garrett. I am the publisher of the Seniors Blue Book, which is a free resource to our community that covers a lot of information for aging well, and is a lot of information for caregivers if you're taking care of a loved one. This guide is completely free. We print 120,000 of these per year. So if you would ever like any additional copies to share with friends or neighbors, my phone number is right here on the front. I am not some big stuffy corporation. It's me, myself, and I, and my Aunt Janet, who's back there at the table. Who's fantastic. We literally hand type every letter, every number in this guide. It started from scratch. I have the best job in the world. I get to go around every day and I get to learn about nonprofit that assist seniors and caregivers in some way. I also get to meet these wonderful experts up here. There are so many programs out there in Pittsburgh that help the community and help seniors in our area. I get to go talk to them, learn about what they do, and I get to put them in a guide, and I get to blast it out to the community. If you ever need any resources in the area, please feel free to call myself. You can call me. If I don't have the answer, I guarantee I have a network of at least 5,000 people that I can get the answer for you. So please don't ever feel like, someone came out of the hospital, they came home, and you don't know where to begin. The senior healthcare industry is very confusing. It's confusing for me. I'm learning something new every day, and I'm out there doing it every day. So please feel free to reach out to any of us, and I'm happy to reach out to the connections that I've made. That being said, today we are talking about death and taxes. This is my very first Seniors Blue Book University. I've had several calls from several of you in here that have asked if this is going to be an ongoing series. So if this works well today and I get good feedback, I would be happy to continue with these. Because I have such an umbrella with the book, I have so many different topics that we can cover in these sessions. That being said, we'll get started with our panel. The way that this is going to work, so I'm going to be the moderator for the questions. I'm going to have each of our expert panelists stand up, introduce who they are for about 1 minute, explain who you are, who you're from. And then I'll start with 3 questions that they had provided me in advance for their top 3 questions they get asked most in their line of business. After we go through the line with each of their 3 questions, we'll open it up for an open Q&A from all of you. Does that make sense? Okay. So, Jeff Weinberg, would you like to stand up and introduce yourself?
Good afternoon, everybody. Once again, my name is Jeff Weinberg, and I have a service called Caregiver Champion. And I am a certified healthcare patient advocate. And what that means is that what April just said, which is that healthcare is very confusing. And I've been in the industry for over 25 years as an administrator in hospitals, nursing homes, and rehab facilities. And one of the things that we do as a healthcare patient advocate is help people get through this bureaucratic healthcare maze. Thank you very much.
Good afternoon, everyone. I am Erin Weber. I'm an Associate Vice President at Heffron Tillotson. I am a certified financial planner and a certified personal finance counselor. So what I do is I work within a group, the Weber Group, and what we do is we meet with individuals very similar to you, people who are in retirement, who are pre-retired or who are in the early stages of the life to help them financially and prepare for the future to make sure that they can achieve their goals that they want to in life.
Good afternoon. I'm attorney Megan Loftus. I'm an estate planning and administration attorney, and so I also work similar to Erin with individuals who are starting their retirement plan, are thinking of retiring, or are already in the midst of retirement, and answering some of those questions as what is the best documents to have for their retirement, and also to talk about what happens in our conversation of death and taxes. I've been doing this for about 9 years, and so I'm happy to meet with all of you today.
Hi, I'm Shelly Moresco. I work at Gateway Hospice. I've been in healthcare for about 25 years. I've been at Gateway for 15 of them, and we offer end-of-life services for anyone who has a life-limiting diagnosis.
Hi, I'm Anna Marie Kajanka. I'm a licensed agent with New York Life Insurance Company, and my clients are mostly retirees that I help put things in place to handle the what-ifs. Usually when you think about life insurance, it's the, what if I die too young? And now people are thinking, what if I live too long? So there's vehicles that can help so that your money isn't all working in the same capacity for you. So it can help you make sure that you don't outlive your income, or what if something happens and you get sick and you have to tap into the money that you earmarked for your grandchildren's education. So we'll address some of those things that help with those tools.
Hi, Jonah, funeral director with the Cremation Society of Pennsylvania's Pittsburgh office. We are a direct cremation provider, either pre-planning or at-need planning. So.
Okay, who wants to be the first person up for questions? Jeff?
He was
voluntold, right? He's in the spot. He's the first one. Okay, so why do we need patient advocate when we have all these other experts on the panel?
So that's actually what I asked when I was thinking about this, and I said, why did April ask me to come? I mean, these people are true experts in their field, and I was just wondering, well, what am I doing here? Well, the cookies are really good in the back, so, so that's part of why I'm here. But actually, as being a healthcare patient advocate, I deal with every one of the topics that these people talk about. One of the things that we do as a healthcare patient advocate is we do a complete assessment of our clients and what their needs are. And that assessment is both physical, psychosocial, legal, and financial. Because lots of times when we're looking at what people need, the medical issue, which is where I can help the best, is just secondary to a lot of the other things that people need. And oftentimes, I have met with people that don't have a power of attorney, they don't have a will, they don't have insurance, and they don't know what hospice is. And I have helped people and referred to people like these panel experts here and help them to get the things that they need before it's too late.
You're still on. 3 questions. Can you give an example of how you have helped a client dealing with death?
Well, unfortunately, when you're dealing in healthcare, lots of times there's people who die. And I have helped people not only who are the caregivers of their relatives deal with death in many ways. There was an individual who had MS, and he was just a tremendous person. And I was working with him in the hospital and in nursing homes and various places that he kept going from back and forth. And what happened, or what was happening, was he continued to decline. And I spoke with his wife, and I said to her, you know, Barbara, he's holding on because of you. I said, he's such a strong man, but he is truly suffering. And his wife was very surprised. She said, I don't want him to suffer. This has never been our plan, to have him suffer like he is. So I said, well, then we need to talk about hospice. And it was as soon as we gave him permission to talk about hospice, and we brought a hospice company in, within 3 weeks he passed away. And lots of times when you're dealing with people who are dying, there are things that go on that a family member just can't recognize because they haven't been in the field. So that's one example. I could give you 100, but I don't think April wants me to do that. So part of the dying process, and again, I've been in the field a long time as an administrator, so unfortunately I've seen a lot of people die. But the dying process used to be something that no one ever talked about. Even if the person was dying, nobody would say, you know, how do you feel about this, or what's going on? And people would pretend that everything was okay. So there was a person who was sort of the pioneer, and her name was Dr. Elizabeth Kubler-Ross. And she talked about the 5 stages of loss. And loss is ultimately death, but loss is also losing your abilities in this process. So if tomorrow I get diagnosed with cancer, that's a big loss. And I'm ending up having to face death in that process. So the first thing that she came up with was the term denial. There's nothing the matter with me. We're all okay. And then he goes beyond that. So you just don't even think about it. The next part is called anger. And it's like, hey, I'm a good person. There's like 17 people in this room that are worse than me. Why do I have cancer? Okay, so that's, the anger. The next part is bargaining. And what we mean by bargaining is, and this is a good place to do it because we're in church, it might be the first time I show up at church. And I say, hey, God, remember me? Well, I'm going to be the most religious person you know if you can get rid of this for me. So we're bargaining with God. The next part is depression. Well, you know what? God just ain't helping us. Not to say that he can't or won't. It's just that showing up isn't going to probably help when you have stage 4 cancer. So you get depressed. And depression is, as we all know, is a pretty awful feeling. And then the last stage is acceptance. And acceptance is you come to resolve that this is what's going to happen. And whether it's dealing with an illness or a loss, and the same thing happens when someone who you love passes away. I mean, you always grieve that person, but in a certain way, you have to accept that that person has passed away. And in most instances, that person would want you to go on with your life and, continue having some form of quality of life. And if you don't go through those things, what happens is you get stuck. And then you can't move on with quality of life. Thank you very much.
What are the biggest concerns regarding taxes when someone passes away?
So it's really interesting. We have this conversation with several of our clients, and the most popular question that we get is people are concerned about federal estate tax. So it's the number one concern people come to us about. But it's the one thing that the majority, probably most of us in this room, don't have to worry about. Unless your estate as an individual is over $11.5 million, or as a couple is over $23 million, you don't have to worry about federal estate tax. So it's interesting. It's one of those questions that everybody comes to us about. But again, unless you are talking about several millions of dollars, it's not something you really have to think about. But one of the things that we do come into a lot, and I don't want to step on Megan's thunder, but is making sure that you don't just have your legal documents, but you have them up to date. Having legal documents that are 10 years old is not going to do any good. But I'll let her talk about that a little bit more. But the one thing I want to talk about in regards to legal documents and those types of things is that you want to make sure that your beneficiaries on your account are accurate and up to date. What a lot of people don't realize is the beneficiaries listed on your IRAs, your 401ks, life insurance policies. Those are going to supersede anything in your will. So say your will says you want it to go to Joe, but the beneficiary on your IRA is Bob. Guess what? It's going to go to Bob. Now, this is really important because we've run into these cases before. We had somebody that came to us. They had been dating someone for a very long time, so their beneficiary was this person. They had broken up for 10 years, and this person had passed away. Had not spoken to them, but guess where the money went? To this person, because they did not update it. So we say anytime a life change happens, whether it's a good or a bad thing, a birth in the family, right? Or maybe a divorce, or maybe even when that death occurs, you want to make sure you revisit those accounts to make sure those are up to date. That is very, very important. And again, anytime I meet with a client on an annual basis, we always revisit that because things happen in life. So you want to make sure that your beneficiaries are up to date. That's the most important thing.
Are there any new tax issues that people need to be aware of?
So I'm not sure if any of you are aware, but there is the Secure Act that came into place January 1st as of this year, which is setting every community up for retirement enhancement. I know it's a tongueful, right? So you hear that term and you hear enhancement, right? That's a great thing. It should be a good thing for everybody. But the law isn't exactly great for everybody. The one thing under the old rules is whenever you had an IRA account and you were passing it on to your beneficiaries, they would have to take out that money over their lifetime. So if they were 30 years old, they could have about 70 years to take that money out. So they would pay the taxes as they go. Now, your beneficiaries are required to take it out over a 10-year span. So that really increases the tax issues that your beneficiaries will have to overcome. Again, they'll have to pay all those taxes within 10 years. So not something for you to be concerned about, but the people who are leaving these accounts to are really going to get a big tax hit with it. So as far as the Secure Act, that is not a good thing that it did for us. But it did do something good, though. So RMDs, required minimum distributions. These are things that you have to take out of your IRAs, your 401ks, your qualified money, money that you earned when you were working. Now people say, why are they making me take this money, right? You never pay taxes on this money whenever you put them into the account. So guess what? The government wants to get their money, right? So when you start taking it out of the account, you have to pay income taxes. So required minimum distributions used to be at age 70 and a half. They would require you taking this money out of these accounts. but now they have pushed that to actually age 72. So the Secure Act did us some bad, but it also did us a little bit of good as well. So that was a good thing within that. So the Secure Act is definitely something that kind of affects everybody at this point. So it's something you want to make sure that you're familiar with.
What should someone do to help prepare for the inevitable future and any tax implications that may involve?
The big thing is plan. It's never too late to put a plan into place, but you want to find someone that can help you do that. You want to find a financial planner. And notice I use the word financial planner and not financial advisor, because the financial planner is going to sit down with you, have the conversation, and listen to you to hear about what your goals are. What do you really want to achieve? A financial advisor might just look at your assets. Okay, great, you have an account, let's invest it. Well, how does someone invest your money if they don't know what you don't know what you do with it, right? You have to invest your money a certain way depending on your goals and what you want to achieve. So you want to find someone that maybe has been working with someone in a similar situation to you. Maybe it was your career, or maybe it is where you are in life. But you want to find someone that has dealt with someone similar to your situation. You also, another really important question you want to ask whenever you are finding a financial planner is ask them if they are a fiduciary. What does that mean? A fiduciary has the legal responsibility to act in your best interest. They have to do that. So whenever you're trying to find a financial planner, make sure you're asking that question. You want to make sure that they are looking out for your best interest at the end of the day.
Okay, Megan, what are the important documents you should have to handle your financial matters during lifetime and after death?
Thank you. Aaron alluded to one of the things that financial planners and other investment types deal with beneficiary designations. But along with making sure your beneficiary designations are updated, there's two important documents that I meet with clients with and make sure they have in place. One is what we call your financial power of attorney. That is a document that grants certain powers to an agent. An agent can be your family member, can be your friend, it can be whoever you trust that could take your place while you're living to handle your financial matters. So a lot of times this includes writing out checks, making deposits, maybe dealing with, if you own a house, dealing with your house. So that is what we call a financial power of attorney. This is only good while you are living, so that ceases at the time you pass away. So that is one document that is very important, and as long as a client or a person has capacity, they can make this document and make as many changes as they like during their lifetime. So that's the one important document to have during lifetime. And then the next thing we want to have, obviously, is a last will and testament. As Aaron mentioned, that a beneficiary designation on IRAs, 401ks, pensions, those take precedence. So if you have any items that you own in your own name, that is what your will is going to control. So commonly, when I meet with clients, we do a list of everything they own. And what we put down is, okay, here you have a house. Do you own the house with anybody? You have a vehicle. You have a bank account. So we create a little chart. And then whenever I get that whole list together, I explain to them that if something happened to you tomorrow, your will is going to control where these assets go. So we want to make sure that the will has the right person, and it also has an executor. So that language means that that person is going to be in charge of collecting your assets, paying off any bills, and then ultimately distributing those assets to your beneficiaries in your will. So you want to choose somebody, typically that's a little bit younger, if you can. And it doesn't always have to be somebody local, but you want somebody who is going to be able to put the time aside, because I don't know how many people have been an executor before, but it can be a very daunting task if there's not a plan in place early enough.
What assets are subject to inheritance tax in Pennsylvania, and what are the rates of tax?
Okay, so as Erin touched on, a lot of people come into her office and ask about the federal estate tax. So for at least the next 8 years, 6 years, something like that, we don't have to worry about that rate. But in Pennsylvania, inheritance tax is on any assets you own in the state of Pennsylvania at the time you pass away. So that means if you own real estate, bank accounts, investments, so you're going to get hit with an inheritance tax and potentially an income tax on some of your assets. Now, the tax rates in Pennsylvania, there's 0% tax between spouses. So whenever the first spouse passes away, everything that is going to their surviving spouse passes tax-free for inheritance tax. But then as we move down the list, the tax rates obviously increase. So for children, grandchildren, it's 4.5%. If you, there was a little new law that came into place at the beginning of this year. If a parent left anything to a minor child, which they consider a minor under 21, there was no tax. But I don't know if that would be the situation for anybody, but it's only for minor children. The next tax rate is 12%, and that's for any of your siblings. So if you do not have a spouse or children or grandchildren, and you leave anything to your siblings, then that's at 12%. And then the highest tax rate, and I kind of call this the other category, is basically nieces, nephews, friends, cousins, anybody who's not a close relation to you. And what happens is when somebody comes in, we have to assess what is called the date of death value of all of the assets. We can reduce some of the tax with a little bit of deductions for funeral expenses and some other expenses that I can tell you a little bit more later on, but the ultimate thing is that almost everything's taxable. The only thing that is exempt is life insurance in Pennsylvania. So that's the tax rates for Pennsylvania.
15% for other. What are some estate planning tools or documents to utilize to reduce inheritance tax?
So one of the number one questions I get is, well, how can I eliminate tax? Well, if I could eliminate tax, I would be busy 24 hours a day. So I cannot eliminate it for you. So the rules I just gave you about inheritance tax, that's if you are obviously a resident of Pennsylvania when you pass away. Because commonly I'll get, well, my child, my heir lives in Maryland or Florida or wherever it is. It's based on your residence at the time you pass away, okay? So one of the things that we talk about in reducing tax is potentially changing some designations. We might make some assets joint ownership because that will reduce some of your taxes. Some of the other things is I obviously say about life insurance, and I won't step on Anna Marie's there, but life insurance is one thing that I say if you already have it, that's great because that's one thing that's passing tax-free to your heirs. And then I do get into a conversation, if it's appropriate, about some trust and some planning that we can put some money aside into a trust, and then that could potentially reduce some of the overall tax. You know, it might not be advantageous to put everything in there, but for some people it might be a good situation, especially if their heirs are in a higher tax bracket. So.
Shelly, is hospice to stay my final days, and is hospice costly?
Hospice services are a comprehensive comfort care service, so you don't have to go to a hospice house. There are places that are just hospice, but hospice can go anywhere you call home. So that could be your private home, a personal care home, nursing home, or even a hospital. You can have hospice services anywhere where you're residing at that time. Hospice is a Medicare benefit, so it falls under Medicare Part A. So it's 100% covered. It's an entitlement that you earn with Medicare. It also covers the medication that's needed, the supplies that are needed, and the medical equipment like hospital beds and wheelchairs and things like that are all provided through hospice if it's related to the hospice diagnosis. And that would be whatever illness that's causing you the need for hospice care. So it is 100% covered, and it's an entitlement that you've earned. So if and when you need it, it's beneficial to use it. We also have some people who aren't Medicare ready yet, and there are private insurances, and most private insurances also have a hospice benefit.
Is hospice just for cancer patients and those who only have a few days left to live?
That's a common question. Hospice is for anyone with a life-limiting illness, so it can be any diagnosis. Sometimes it's just somebody who is at the end of life. They're 95 years old. We have 100-year-old patients, and they don't really have a specific diagnosis. They're just declining and at their end of life. So if you have a life-limiting illness, you can be appropriate for hospice. It's not just cancer, and it's not just those final few days, which a lot of people wait for.